Oh, what is going on here? We're going down, ladies and gentlemen. Are we? Well, let's have a look. This is the chart that is scaring everybody in the market right now. So after we've seen, obviously, this massive unwind of the yen carry trade. We've heard it so many times in the recent weeks, but that was just a massive move here. We've seen quite a good recovery in the dollar yen. But now, on Friday, we saw like, damn, what's going on here? And today, that candle, because this is daily candles that we're looking here, is an extremely decisive candle of what is going to happen here. If that candle closes really negative, then we might be in for a big continuation of this move and also sell-off of risk assets, meaning stocks, crypto, all of these things. But is this the end of the world? Should we, just like stack on water and build shelters and all of these things? Well, wait a minute. Let me see. As always, keep your head cool, have an ability to go through information, analyze, interpret, make a plan, follow your plan, use statistical data ideally, right? Or always actually. So let me go through a couple of things here. Number one is, Volmageddon was here. And obviously, this is what I just explained on the dollar yen. So when you see narratives like this on Twitter, and by the way, I definitely recommend you to use Twitter. It's the fastest way to get to information. If you follow the right people, you actually also get quite insightful things. And it's really just, in my opinion, the place to be. It is a town square, literally. I personally like it a lot. I use it a lot. So this is the scare of the market. That's the chart that you should keep open in front of your eyes. And what we're seeing here, and that might be just another, you got to read the signs. That's what I meant by statistics also, even though this is like more of a fundamental history rhyming type of aspect, is that you can see here like BNP Paribas halts redemptions on 2 investment funds. Could it be that we are here? Why am I saying that? Because we can see here that UBS is actually liquidating $2 billion of real estate funds. So heavy concentration in office properties, right? So all these work from home developments didn't do too well for these kind of things, right? The United States represents the largest country exposure at 22%. So could it be that we're here? Well, I don't know. So we got to keep our eyes open, right? When the Fed start, and that's actually an extremely important point, the Fed. And that's why, in my opinion, when you're looking at long-term stocks or like risk markets, I am more of a buy the dip advocate than sell the rip. I tell you also why, and also how I think is the best way to do it, very simply stated. Anyway, you can see that from here, there are a bunch of things, right? Here is the rate cut that came in 2007, 2008, and then the market dropped some, but then we got the bull trap, right? And then, we got the big capitulation. So keep that in mind once we go through our version of our times here, right? Don't completely forget about that. Why is it like that? Why is there rhyming of history? Why is it cyclical? Because it's people. I don't think we changed as people so much, right? So we're still driven by fear, greed, by a bunch of, let's just say, emotions that, even though you could argue that people have been, brainwashed quite a lot more in the recent decades, but I hope there's good enough information out there and ability to resist that, but that's a different topic for a different day. So what are we doing here now? Now, I think this is actually the key. And you could say, like, isn't that negative? You see, like, the U.S. government budget deficits under Biden and Trump, the highest, World War I, World War II, what the fuck? I like that. I think it's a good thing. I tell you also why. It's not a good thing for everything. So that's why you need to understand a little bit macroeconomics, how things tie into each other, and, make the right decisions in the right moment. Okay? So, and I think this is the important information. The U.S. national debt has moved from 22 trillion to 35 trillion over the past 5 years. It's a 59% increase. Just think about that. So that's why we're here at what the fuck, and, it will go much higher in the years to come because there's absolutely no political will to stop deficit spending before it becomes a crisis. That's the key takeaway. That means if the market drops hard, drastic measures will be taken to save it. That's a bet I'm willing to take. And a loser of that bet will be the US dollar. Or let's just say that there is no better other currency in the world because there's no stronger economy. Still, let's see how the whole BRICS situation and things like that will develop. China, don't tell me about China. It's massively struggling economically, demographically, and, it's not better than the US. It is not. So inflation will continue to be a problem. Now, also, deficit spending will continue to take place. So that's why I think we're sort of trapped. And that means to me, that will help asset prices. Asset prices will continue to go up. And one thing you should not forget is that good stocks of good companies that make good money are not a lottery ticket. They're absolutely not. Something where I'd be a little bit more cautious is real estate, because it's very much subject to the locality. Now we see a bunch of rules that might apply about for how much you could sell or rent, or no, too not flexible. Not my game. I don't want to play that. Stocks, interesting. Bitcoin, you understand the Bitcoin narrative, the real story behind it, and how it is everything that our current fiat system lacks, and what would happen if game theory plays out and even fiat money governments will start printing to buy it. Is that possible to happen? Absolutely. Is it probable to happen? Every day a little bit more, in my opinion. But that's also, again, more of a long-term trade. So, and that quote is also very important. When you hear all these crash prophets, all these people that saying, oh, we're going down, man. Everything is shit. We're not going to make it. We are going to make it. I'm telling you, we are going to make it. And far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. So that's why buy big, strong dips. Don't try to sell the rip. Of course, the gold market, when it shot up to $2,500, there was a correction. It's just normal, After big moves, there's profit taking. Understand the psychology and the behavior of market participants. And then you can also, trade trades with a higher probability. But what I'm saying is that don't listen to the crash profits. Look at the chaos that you're looking forward to so that you can, gobble up good stuff for little money. And actually, Bitcoin might be something like that. So, talking about the market today, what are we seeing here? So this is the S&P, and I think right now we're here. Obviously, that recovery has been massive. Just think about this. This kind of move took months here, right? Now we're here after such a move. It's normal that we could see some pullback. Now, if we close decisively above that pivot level here, 55.70, then I think we might be testing that wedge here. And make no mistake, that is still a bearish retest because we clearly fell out of here, right? We fell out, we retested, wow, we went very massively down, and we could be in for another retest. That's actually a moderately bullish scenario. I would be, waiting. If we close more negatively here, then going below the 5,460, that could be interesting then to reconsider buying in once we have some sort of consolidation. So again, understand that when you should do what. Don't just rush into a hype and don't just sell a top neither. It doesn't work like that. This would be, we anticipate the market's going down. If you had sold here, said oh no, we're going down, and then you'd be crushed because you would sell probably with leverage too. Forget about that. Same we have with the NASDAQ. Important level here, 1970.38. We need to break above that. And then only then I would still wait for a correction here. So so right now is not the time to trade it. I need to wait it. If it comes down and it holds here around the 19,100 level, that would be bullish. I'd be interested in buying that. And that would go also hand in hand with obviously the retest here. So that's why we want to, look at a bunch of things. Obviously, this is both extremely correlated, NASDAQ and S&P. What you could look at then is also the yields, U.S. Treasury yields. They are an indicator for risk. If they go down, then the market is complacent. They don't expect risk. That means the cost for debt is going down, so people aren't expecting problems. But if the inflation continues or if the government spending continues, then probably the yields will continue to go up. And that goes for any currencies out there. And that's why Bitcoin is interesting, by the way. And here we have, speaking of Bitcoin, crypto. keep it simple, guys. First of all, if you are not native in the crypto space, stay away from all the little shit. From all the meme coins, from all the, altcoins, from all the stuff that you have no idea about. Crypto has its own rules. So if you are deep down in one thing, in one narrative, like DeepIn or even meme coins or things like that, then yes. But if you don't understand anything about it, keep it simple. Stick with the blue chips. Bitcoin, Ethereum, Solana, and maybe actually stop there. So what's important here? What we're seeing here is the crypto total market cap. We've seen that it's been going down. We had like this massive wick, and massive wicks are usually also a bit of a foreshadowing. And because we're more at the lower support here, that's not, for me, a place to buy. So to buy a dip now in crypto has rather a bigger risk than if that level clearly has been confirmed to hold. And that's why I keep it simple. You don't even look at the individual cryptos, just look at the crypto total market cap. And, and then you don't get suckered in. You're not the stupid person that is buying the bottom that turns out to be not a bottom, okay? And meanwhile, in the world of statistical edge trading, my public track record, we have done 5.76% in August. We have basically almost recovered the drawdown that we had in July, the first drawdown that we had in, I think, 19 months or so. And that's obviously a very positive. And if you want to learn that exact trading strategy that I'm applying here, I've done a video on my YouTube where I'm going through everything. I explain the complete rules of the strategy. You can check it out completely for free, obviously, and so that you can see how that return was actually generated. And that pullback here, or that recovery, should also clearly show you that there is a method behind that. I even did some video explaining how I handle and deal with drawdowns. So yeah, here you have the proof. So numbers don't lie. So that's it for today. If you like these videos, please like, share, subscribe, tell your neighbor, tell your friend, everybody, and I look forward to seeing you in the next video. Thank you very much. Bye-bye.